Yo, welcome back to PitFlow. This is Pedro, and I'm taking you through what happens last week, and then we go through or we prepare for what's going to happen tomorrow. Sorry, I mean for next week. You get it. So I'll go straight to the point, and let's see what happened and what's going to happen good now, right? So give me a minute. Yo, yeah. So first things first, what do we do first? We have to start looking at the rejection point of price. Okay, so I'm going to start fishing out the rejection point, and I always start from the top. Okay, um, price never take out those highs. Those highs were never taken out, telling us we are bullish. Sorry, we are bearish. Okay, so let me use the actual tool to make the work a bit interesting or more cooler. Yeah, so you could see out here that all the significant highs. First, this was the significant high, right? A price took it out. So your next thing, the next thing you look at is the significant low, right? So this is what we have. But one thing is that this is 4 hour, right? Now in 4 hour, this is what we have. The next important area or levels in price. So if price comes here and price doesn't take this low out, okay, let's say price drops, doesn't take this low out, then possibility of us being bullish is still high because still a high is taken out, which is this, right? So now let me go back again. That's so if that's the case, price has created a new significant high. So we'll bring our high back here. And now we look at this low being very, very important because it is the lowest or the most, um, should I say, it's a low that stands out. It really stands out over here. If you look at all these rough edges, this is the only low that stands out in this area. So it's very important. Okay, so now this drop that is, it's about to happen is due to, or we are using that to identify where price is really coming to. Okay, so if I put this here and price takes it out, okay, price sells into it, then it means we are still bearish. Okay, so at that moment, you start looking at the next low, which is this guy. Sorry. Sorry. Okay, so this guy. We were talking about the highs. Okay, now we have lows, this low, and you could see that price has taken it out. So price is still doing what? Taking out lows. And at the same time, the smaller time frame lows have all been liquidated by price. Okay, all these are lows and price has taken them out. This is a sign that we are what bearish because price is what running through the lows but not the highs. So these highs are not being what run through, but price is running through all the lows. This tells us that we are bearish. Okay, so now this low is the one that took out this low. So price not being able to run through this significant high tells us that we are still bearish. So we are still expecting price to run through this low. And if price runs through this low, it's taking us straight down to our let me zoom. Is it a zoom? Okay, 1 second. Let me just push this guy here. Good. It's taking us all the way down to this area. Okay, this area is the only thing that is preventing, that is should I say, a stronghold to prevent price from going lower. Okay, so let me remove the drawings now. I'm gonna go into daily because we are done here. Price has started taking out. Okay, let me go into the actual area where price is right now. Okay, what you can see is we have a lower, a swing low, right? We have a swing high. Okay, this is a swing low, and this low never took out this low. Okay, so this is the next low to look into, and price did what? Closed into it. This tells us that price is about to change direction. So with the principle of order blocks, you call this breaking market structure, right? So this area should hold price. Even if price retraces and it holds it, then fine, we are dropping further. And why should price drop further? We have so many liquidity down here. We have almost an equal low over here, and price does not let it go. It will definitely take it out. So if price takes out this equal low out, price will take out this wick. And if price is taking out this wick, then it has to take out this rough edges as well. That is how price works. They look for liquidity, look for where these kind of setups are, and they really clears it off. All right. So let me clear the chart and let's have a look again. If you look at this same area, the same principle happened over here. We have almost an equal low, right? Price went up to find more strength to drop, and it came to take it out. So whilst it was taking it out, it has to take out this wick as well, giving us lower low over here. So the same thing is about to play out again. We have almost, you have to train your eyes to see it, almost an equal low. So if price is taking it out, it has to take out this as well. And if price is taking this out, okay, it is close enough to detect this equal low. All right. So there's another equal low over here. Price will have to take it out. And if price is doing that, you need to look at certain things again. So what do? We just look at your left hand side. What do we see? We see the last area price came to create its barrier before started shooting up. So this place alone, liquidity gap, right? Full of only bullish candles. So if price is here, then it's possible price will just come lower because it has taken out these equal lows out. So it's possible price will just come lower, fill this gap, and maybe you start running back up with it. So yeah, until price takes out a significant high like this or any of these highs, we are still in a bearish condition. Now you look at price in another way, which is chart patterns, these triangles and things, okay? And as I've been drawing this all the time, this is a impulse drop and then continuation pattern, giving you a pennant or a symmetrical triangle, because we have this the price respecting the higher highs and then the higher lows, or lower highs and then higher lows. You see price doing this and breaking out of it. We need to determine what our TP, and where is the TP. Our TP is always determined by calculating the lowest point in a symmetrical triangle to the highest point in a symmetrical triangle. And our symmetrical triangle starts from this area and this area. That's why our TP is calculated from the highest point here to the lowest point here. So if that is it, then I carry my triangle and place it on the actual breakout. And where does it go? It also brings us to the same place, somewhere 10-15. So with the theory of how do we even put it, quarter theories, I'll put it on a whole number, 19, is it 19? Yeah, 1915, sorry. So 1915, and I'll put it, oh, sorry, 1815 rather, 1815. So 1815, price should, yeah, you could see 1815 matches with our TP calculator. So yeah, possibility of price dropping here is high. So you get your setup right. If you have enough in your account, you just enter your sell here, your stop loss here, you are safe. And this alone, let me see if I can do the calculation for the risk to reward ratio. Okay, so from here to here, this is your what you are losing. How much are you making? 1, 2. So you are making 2:1, or how do we even put it? Okay, you are losing 10% to make 20%. And I think this is a good trade to risk like that. So yeah, let's see how next week goes. And I'm sure this week is going to be fun. Yeah, this new week is going to be very, very interesting. Let's make money and let's destroy good. Let's make some money. Thank you. Enjoy your day. Take care and bye bye.